Hey, welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today we've got some breaking news in Simile Direct stock, which has happened over the past 24 or 48 hours. If you're new to the channel, I'm a Simile Direct stockholder and have been since the neighborhood of $7.50. I bought it on the dip way back in the pandemic. And it's one that if you really dig in and look at the growth trajectory of this stock and where it can go down the road, it's one worth getting excited about. And at the time that I purchased it in the $7.50 range, I was beaten down from the pandemic, so it made a lot of sense. But here we are today, and Simile Direct has gotten a ton of interest. Mostly on the heels, it seems, of this break the short sellers movement that we see in Gamestop and so many others. Simile Direct had about a 30-35% short ratio, and I think it's being lumped into this group of break the bears and power to the people kind of thing, which is great news if you're an existing shareholder. So we'll get into the numbers. I'll let you know what I'm going to do with all this news going on. Quick reminder that my stock picks and projections are just my opinion for your entertainment. Please make sure you do your own research and due diligence before jumping into any stock. All right, so here we are on Simile Direct just before noon. Current price of $14.18. That's up 6% today. And if you look here at the 1 month chart, you go back to Christmas time, this one was in the $12 range. And you can see it's had some pops here and there, but it was on a pretty decent downward slide heading into this week. You see that 1057 number. I was actually thinking to myself, if it went under $10, I was probably going to add some shares for the long term. But lo and behold, you get to the 25th, which was yesterday, and it pops up to, $11.98 or so, and just kept going throughout the day. Finished the day, it looks like in the 13s, and now it's still running up to $14.33 today. Settled down at $14.18. We'll see how long it lasts. And if you're new to Simile Direct, they make the teeth aligner mouthpiece system, direct competitor to Invisalign, although with a completely different model for using teeth straighteners. They sell mostly direct to consumer. They have these impression kits, 3D scans at local dentist office, and so on. And the big catch here is that Simile Direct offers a more affordable approach to aligners than you would see with things like Invisalign. You can see approximately $2,000, and then they have the monthly plans and whatever. They made some pretty good strides in the pandemic on adding more and more insurance providers to help you get these aligners covered under insurance. And outside of the fact that this network of 3D scans and impression kits and questions all really just struggled with the lockdowns and health restrictions, all those things, not to mention that you had unemployment and folks were probably putting their kind of like beauty or superficial budgets off to the side because nobody's going to, weddings and dances and all that stuff. All right, looking at the fundamentals of the stock today, this is a $5 billion market cap we have here. No PE and EPS. This company was on pace to hit profitability as early as 2021. I'm imagining that got pushed back. We'll find out more on the earnings date. And you look off to this chart of earnings reports. It was several quarters in a row of missing earnings, mostly impacted by the pandemic. A little bit of life over here in the Q3, and we are expecting Q4 in the neighborhood of February 23rd. And the expectation on the street, if you sort of read the reviews and stuff like that, is that they will have made a lot more progress with booking new appointments and generating leads. All right, on the analyst side here in Yahoo, a year ago EPS was negative $1.12. The average estimate for this year is minus 74 cents. Next year could grow as high as only negative 24 cents. And this is a fast-growing company, and while it's hard to tell now during the pandemic, You know, they had $750 million in 2019 as far as revenue. That obviously, where's the average here? That obviously will take a dip when this year closes. But already into 2021, the expectation to hit 850 million puts you back on pace to where things were prior to the pandemic. Looking at those growth rate estimates, you know, these are sort of ballpark figures, but you get the concept, right? Got a 67% plus outlook for next year, and then a 5-year growth rate of 178%. So lots of good things in the mix for SDC in the future, including international, which they've already started. And even if they hit half of these goals, quite frankly, they will be doing a great job from a stock perspective of being a growth stock. SDC is one of the most active stocks today in terms of volume. You got to scroll down a little bit here, but you have 10, almost 11 million shares changing hands in Simile Direct Club right now. All right, so what am I going to do with my SDC stock in light of this recent run-up? I mean, when this thing hits a little bit over $15, I'm going to be up 100% on this thing, and I have to start thinking about what are the best opportunities available in the market. The way I'm looking at it is basically giving myself two options, right? Which is, if it started to break over 16, I'm almost for sure need to take at least a couple bucks in profit, just in case this mania that's around the stock right now goes away again. So if I decided to take that route, I would likely sell half of my positions and let the other one simmer for a long time, multiple years. And that would give me the satisfaction of kind of making money, so to speak, but then also having some skin in the game for this one that, heck, in 3 to 5 years could be a significantly different story, and that is the reason that I bought in on it. Don't forget, if you look at Align Technology and the empire that they've made, they're two kind of different worlds because Align's been in the game for a while, but that stock's at like $500, $600, something like that. And I'm not saying that SDC is going to replicate that penny for penny, but there's definitely opportunity, and that's always what we're looking for. They also have a lot of support from analysts, and generally speaking, their growth rate looks really, really good. Now, on the flip side of selling half my positions would be just to hold and ride it out from here. Going with sort of reinforcement theory, right? As I did the research on this one before I purchased it, I was very excited to get in. I definitely was disappointed that the stock had ebbed down a little bit over the past 30 days or so. And I was starting to wonder, with the short ratio being in the 30s, am I going to be stuck with this one doing nothing for a long time? So that's what makes the current event so exciting, is I could reach 100% gain here any day, literally, and we still even haven't earnings yet. I feel really good about earnings. I monitor a lot of things with SDC as far as like the reviews and how customers are sort of interacting with them online. So it's not an easy call which way to go. Now, if you've been riding with me on this stock since I bought it, I will say that I'm more than likely leaning towards the sell half proposition, or sell a third of SDC and just take that money, count it as a win, and it covers basically the investment on the other side. And now I've got a long-term SDC investment that's basically no frills, right? Or no expenses, because I've paid for it already with profit. All right, so that's how I'm looking at Simile Direct Club stock right now. This is great news if you're a shareholder. Don't know specifically if it's tied to the short ratio, but certainly that has been in the news a lot lately. And you have other tailwinds coming right up the pipeline, assuming that earnings goes well. And they don't even really need the monetary earnings to be spectacular. It's more or less that vision of where 2021 goes for Simile Direct that's going to be important. And it just feels like with the vaccine and stuff like that, that the news is only going to get better, certainly from where it was a year ago today. All right, guys, so that's my take on Simile Direct stock and what's going on in this environment. If you're in the stock, make sure that you are watching that ticker a couple times a day so you can make the best decision for yourself in terms of your money. Do you want to take some profits? Do you want to sell it all and wait for the next opportunity? There's lots of ways to play this game. Hope you guys liked this video. Please give me a like and subscribe if you did. We'll see you on the next video.